If you don't understand these 5 things in trading, you're really going to struggle to succeed. You're really going to struggle to move forward. But if you want to learn them and understand what you need to do, then keep watching this video. Before we start, guys, I'd appreciate one thing. If you like the video and you get value from what I'm saying, please like and subscribe. I'm trying to grow the channel. We're new. We've got a new channel, so I'm trying to reach as many people as possible. So it's hard at the beginning. So if you guys just like, subscribe, jump on board, let me know suggestions in the video, in the comments, any new videos you want me to make. I'd appreciate it. So let's get into the video. So you really have to understand that no strategy has a 100% win rate. So you have to accept the fact that you are going to take losing trades. That's a hard pill to swallow because no one likes to lose, losing in life in general. But with trading, you have to accept you can do everything correct. You can place a trade perfectly, execute exactly as you should, and it still lose. So you have to understand that losers aren't necessarily bad. That you have to accept that's part of doing business. That's part of the expense of trading, because trading, it costs very little to set up. You just need a laptop, internet, set up a broker, maybe pay for some charts like TradingView. But the expenses are very low. So if you have 10 trades in a month and you lose 5 of them, those 5 have to be the expenses, and the other 5 that you win are the profit, and then you get obviously the profit between both of them. But so don't look at losses as a bad thing. If you know that you executed the trade perfectly, then you should be accepting of the losses and it shouldn't affect you. You need to understand that winning trades sometimes aren't good, like profitable trades that make you money. They're not necessarily the good outcome, and a losing trade isn't necessarily a bad outcome. So for example, if you were to say to anybody who's not involved in this industry, oh, I had a win today, they would assume that's good. Oh, well done, you made profit. But actually, that's not necessarily good for the long term, because I could place a trade that's just a random trade, make me money. It happened to me actually when I first started. I put on a bit bigger risk than what I should back a good 3-4 years ago. And I made more than I've ever made trading. And that was the biggest mistake I could ever do, because I ended up making more. So I did it again and again and again. And because there was no strategy behind it, there was no statistics or data behind it, all that happened was I kept taking that trade again and again, and I just gave it back to the market. Because little did I know, maybe that trade wins 20% of the time. I happened to win today, and that made me X amount of money. I do it again and again and again and again, and I end up losing and giving it all back. As opposed to, let's say I had a losing trade today, most people would sit there and go, oh God, that was terrible. I had a bad day, I lost. Actually, that could be a good day, because I know if I take that exact trade again, although it lost today, that in the long term, I do it again 3-4 months from now, take that exact trade again, I'll be up, because I know the odds are in my favor, the statistics play out in my favor. So you need to stop looking at winners as always a good thing and losers as always a bad thing. Yeah, of course, you want to win, but the win comes from executing your plan, executing your trade. Now the outcome, it shouldn't matter. It's the win comes down to, did I execute my plan to the exact T as I should? And then the outcome will take care of itself. Obviously, everybody trades differently. So I can't really say what the best strike rate and risk reward you should aim for. But personally for me, I try to aim for a 50 to 60% win rate. So I know half of the trades I'm going to win. And when I win, I want to get at least a 1 to 2. So when I win my trades, I want to win 2 times what I lose. And that way, I know I'm winning consistently 50, 60% of the time. But I'm also confident when I have a few losses in a row, I'm confident that when I have my winners, because I win minimum 2 times what I lose, I know naturally I'm going to get those losses back and get out of drawdown. So some people do it differently. They might have a 1-to-1 risk reward and have a really high strike rate. But for me, that's what works best. Obviously, it's quite difficult to do, because in life we're not really programmed to think this way, but you have to think in probabilities. As I just said, we live sort of thinking in the now, like, oh, did I win today? Did I win this week? But you need to think in probabilities. Think of a high sample size. I have 100 trades. That could take months. So it could take 3, 4, 5, 6 months. Out of the 100 trades, how many did I win? How many did I lose? What was my risk reward? And try think long term rather than short term. Because if you can think long term, that's what gives you that allows your edge to play out. That gives the opportunity for your trading strategy to play out. It might not necessarily play out in the first month or two. You might be going through a drawdown phase, but if you have enough time and you have this odds on your favor, then you'll be successful. You just need to allow the time to play out. And what a lot of people don't do, and what I did, is I'd start having a drawdown period, I'd lose, and then I'd end up trying to change strategy. So then I change strategy, and then it doesn't allow that strategy drawdown to get out of drawdown and to start winning. So I'd have a few wins, then I'd have a period of losing, just naturally 50% win rate. I'm going to have a few losses in a row, 3-4 losses sometimes. And then you'd look to change things, and then I'd look to change strategy. I'd look to change what I was doing, tweaking things. And then I'm not taking the same trades over and over again. So then I'm not ending up getting out of the drawdown. So it's just happening like a massive cycle. So you need to stick with your trading strategy, know the data, and just execute that to a T. Lastly, have a tried and tested trading strategy, a plan. You know exactly when you're taking trades, what times you're taking trades, what you're looking for, the areas that you're looking to buy or sell from, and it needs to be like a checklist. So that way you can limit the emotional response. Obviously, naturally, we're humans, we're going to feel emotion. But if you're able to have a tried and tested plan, you know your data, and you know what you're doing, what you're looking for, what signs the market's going to tell you to buy, sell, you can then, if there's no trades, you know straight away, look at the charts, zero opportunity, no trades today. Or there's one opportunity if this happens and this happens, and you can sort of logically go through the checklist and see, has this played out, has this played out, has this played out, and then you're able to take the trade. So make sure you have a tried and tested plan. You need to understand this. So yeah, if you guys like this video, please like and subscribe, comment your thoughts, and I'll get back to you. And yeah, thanks for watching, guys.